Good morning, one and all. I hope you are well, and welcome to this morning's video. So, I apologize in advance if the sound cuts out during this video. I am having some problems with my mixer. It keeps dipping in and out, switching itself on and off. So, I may need to replace the mixer or replace the USB cable. But hopefully, we will stay live. My vocals will stay live throughout this video. But anyway, let's break these pairs down. So, I have pound dollar, euro pound, and Kiwi dollar on watch today. I would say my favourite of the bunch, with all confluence factors considered, is pound dollar. So on the DXY ever so quickly, we can see we had this near miss to here, okay, and then we've come down. It's like a failed attempt to push lower, and we seem to be consolidating up here. Okay, we seem to be creating a ball flag to push higher. So we've had the impulse up correction here. This could be a we could start seeing the DXY push a lot higher. If that happens, then pound dollar will naturally move lower, as will Kiwi dollar, which we'll touch on as I'll get down there. So just factoring in the DXY at the minute. But on the higher time frames on pound dollar, we have this exchange of liquidity here, which caused price to break out of all of this and start moving to the downside impulsively, bearing in mind we're on the weekly chart, okay? So we had the near miss to that area. We tapped into it. We had another near miss there. We almost had a bit of a reversal structure there, and then we pushed down aggressively. You can see that we've had this impulse correction, potential continuation to push lower. Seems logical to me that we would move lower to tap into at least this low and potentially this one, which this one kind of near missed too. Okay, so there's no logical reason at this moment in time why price would move long from where it is. Okay, if we just drill down, you can see with the impulse correction continuation, price seems to be gravitating back towards here, which was just happens to be the retest of the back end of the previous low. So that makes contextual sense as well. If we just zoom down a little bit lower, we had a similar thing here on the lower degree. So we had all of this long correction there. We break out. There's a bit of a footprint there. And then we get the gaps, the near misses to that area, break above. Bit of a strange move to the downside to start with, but we do eventually drop out, retest the back end of that, come down. Technically, we've retested the back end of that, come down, left another footprint. So price is moving down a little bit correctively, but it is moving in sequence. It's moving in trend, okay? Now, because it's moving down correctively, there is always the possibility that price could do something like this, move up to this area to give us that kind of structure where this becomes the middle section, especially when this high failed to retest, ever so slightly failed to retest the back end of all of this volume. So I am factoring that in, which is one of the reasons why I wouldn't just be looking for a little correction here if I was going to get short with the risk entry. Okay, but I am factoring these things in. Okay, so what I'm going to be looking for is, if we just drill down to the 1 hour, okay, you can see we've even got a middle section within here now. Price seems to be coming up. We've broken out of that, tapping back into this area. What I'm going to be looking for is, if I am going to take a risk entry from the edge of structure, it's going to be a weighted one. It's going to be a 4-hour risk entry, and that would require price to get here correctively. So if we trickled up to this area, 4-hour rejection there, I would look to get short on the break. If we just literally just rocketed to that area or start to break above, then I would wait for the pushback down and a tight flag of some description, a 5-minute or a 15, and then I would look to get short on the break or within it. And then down to the lows, I would have, technically you could set, especially given this sequence, you could actually set, and depending on the size of the stop loss, etc., I may consider setting my take profit there. Okay, but if we have to go for a slightly wider stop, then my target will be where I've got it on the, where is it? Down in this area here, that low there. And that's what I'm going to be looking for in that trade there. So if we've got a really tight stop loss, then I'll consider setting my take profit there, because one of the reasons being that if this is a middle section to push lower, to push back up to retest the back end of this because this narrowly missed it, then it may make contextual sense to set the take profit down there. But if we've got a wider stop loss where the risk to reward is not as great to this low, then I would just trail it, and set my take profit at the more higher time frame low, and that's what I'm going to be looking for on pound dollar. So euro pound, just checking the mixer to make sure we're still connected. The lights are still on, which is always good. So euro pound, we're correctively moving down to this significant low here, which is visible on the monthly chart. Okay, so it makes logical sense to me that after we had these kind of low tests here, which if we drill down, we can see failed to commit. Okay, we've rejected from a sharp area of value, and we've had momentum on the daily chart. Let's just go back to the weekly ever. So we've had a weekly rejection there, not the best, okay, but it is a bearish rejection from that high. We've had a daily follow through, okay, and we've had the near misses, the gaps to the area. You can see here, gap to this high, gap to this high. Eventually we tap into the gap, and then sure enough, that's where the momentum kicks in. As I drill down, you can see that we've consolidated here. Okay, now technically, so what I'm going to be looking for today, because of the risk to reward, one of the main factors anyway, I'm going to be looking for a 3-touch 1 hour continuation where I look to get short within the structure as opposed to on the break. Otherwise, you are ending up with a massive stop just for a 2-to-1 just down to there. I'll be looking for something like this. Of course, the London session starts in about an hour or so's time, and we do have to obviously factor in the time of the year as well. Now, the other thing that I have to factor in is the fact that if we just drill down to you can see this on the 5-minute chart, technically, we already have a completed structure there. Okay, so we have this structure here, 1, 2, 3. We have a bit of a middle section there, and we also retest the back end of the previous low. So price technically doesn't have any reason to come back up there other than the fact that this is just not as developed as it might be. Okay, so but one of the reasons I'm not looking for anything else further down is because I don't want to be, we're risk managers first and foremost. I don't want to be trading into these lows. So that's another reason why I'm waiting for the risk entry within the structure so that I can manage it down to these lows, because there's quite a lot of volume here. Okay, so if price is going to respond from anywhere, it's going to respond from this area if it's going to move back up again, especially as we didn't actually break above this high. So I'm factoring in all these things. So technically price doesn't have any reason to come back up, but if we do get a 3-touch structure which is more visible on the 1 hour chart, then I would look to get short with what I've just illustrated there, and then I would be able to manage this down to there for something in the region of 2%, even if it does come back up. And then down to the lows, we've got 7%, okay? And that's where I would set my take profit, because technically we've then hit the 90% area of this range as well, regardless of where you kind of measure it from. Okay, so that is an area where if price is going to pull back deeply, I would anticipate it doing so. So there we go. That is euro pound. Just save that quickly. The lights are still on my mixer, which is good. So if pound dollar's moving to the downside, let's try that again because my alerts are now starting to go off. What was that? Aussie yen. Okay, right. If pound dollar is going to move to the downside, and then Kiwi dollar is likely to do so if the DXY is positioned to move higher. Now, one of the reasons this is lower down on the list is just because of how far in this run it is. But if we just zoom out, or potentially how far, we don't know how far price is going to go. So we have this low here, and we gap towards it. Okay, so we've had serious follow through on the monthly. Don't forget that this candle will, if it closes like this at the end of this month, then it's highly likely that we're coming through to take out this low, low near miss 2. Okay, if we just zoom in, you can see that if we were going to move to the upside, we would likely have found liquidity here and push back up to tap into these highs, which these highs near miss 2. But we just steamrolled through through this low, and we've consolidated underneath, and you'll see that as I start to drill down, which is suggesting to me that we're moving lower into these areas. As I mentioned a moment ago, there's your correction. Okay, this is about as straightforward as it gets. We've had these prior corrections, we've dropped out of all of those, and then we're consolidating underneath. So what I'm going to be looking for from this pair is a tap into this, tap into the area of value, okay, and then I'll be looking for a 1 hour impulse down followed by a 15-minute continuation, not a 5. And you might be thinking, why? I'm not looking for any risk entries from the top here, or any 5-minute entries, because again, we have to zoom out. We're very far into this run, and you have to remember that a lot of people that caught a run like this may consider taking profit. Okay, we've not really had any massive pullbacks yet. So if price is going to create a deep pullback, this is likely where it would do it. Okay, unless we are actually going to reverse from this area. So you have to factor that in as well, because we would tend to get the tighter corrections if we were going to reverse from that area. But regardless, if price was going to pull back deeply and start breaking out and doing something more, a deeper correction like that, this is the area in terms of this overall move where it would do it. So I'm not looking for risk entries here. I'm just waiting for the tap into that area, the 15-minute push down. Then I would look to get short on the break or within it. And then we've got 3.5 to 4% to that low, depending on the size of the stop loss. And I would be targeting, because my minimum is 5% where these entries are concerned, I will be targeting that near miss to that high. I don't know what's happened there. It's just moved my alert. I don't know how that happened. Let's put that back. I'll be targeting that low that narrowly missed that low there. So that's what I'm going to be looking for on these pairs, or from these pairs today, folks. My mixer is still connected. That is great. I shall see you again in the next video. Have a great day. And if I don't make one tomorrow, given that it's New Year's Eve, I wish you a very happy New Year as well. I'll speak to you again soon.